Hey guys, Sean Mory here for another session of LenCred Credit Geek Q&A. Joined once again by my partner in crime, Dustin Weitzell, our top funding advisor for the year of 2015. We're going to answer a question today, I believe, on small business loans, right?
Yes, sir. Let me see what we got here. First question. How do you get a small business loan for a new startup business?
Okay. So, great question. I believe it's from Jamie from Michigan, it looks like. Great question, Jamie. Simply put, the way I can answer that best is to get a loan for your small business startup, more often than not, the best option is going to be to go and get an SBA loan, right?
Absolutely.
And so with that, 10 to 30% money down usually. So if you're looking for $100,000, you probably need at least $10 to $30,000 in cash, liquid money, whether that's through a 401k or money under the mattress, whatever it may be. Then they're going to want collateral, probably 100% collateral on whatever amount you're borrowing. It could be before, during, or even after they're going to need that. But then more importantly, that process can take anywhere from 30 days to 6 months. So that's how you can go about getting a small business loan. The way I would answer that is if you can't qualify for that or you're not blessed with a bunch of cash in the bank or a bunch of assets and collateral.
Or you want to keep your marriage and you don't want to pledge your house and all those things, right?
That's right. Make sure that you keep the wife happy. There are other options. Wouldn't you agree?
Absolutely. And I was just reviewing one of our white papers that shows the 16 most top ways to finance your small business.
Yeah.
And out of those, only about 5 of those are really loan type products.
Okay.
They're like rolling over your 401k. Going after an actual traditional loan or SBA, which, like you said, approves for 0.002% of small businesses in America. So, although it's what all banks try to get you, you're not going to qualify for those.
Right.
Which leads us to when clients ask us, I see you guys do a lot of credit card financing for startups, or lines of credit. It's not because we don't do all those other things, but that's what you're going to qualify for.
Well, and that's their borrowing criteria that we're going by. So if you don't have collateral, you don't have down money, there are other options. It's all about figuring out, do I need a loan or do I need money to get my business started?
Absolutely.
Right? Cool.
It's revolving, so if you get the right types of credit to a loan, you pay it off, kind of like we did in our video. We talked about that already. But the lines of credit are awesome. It's just they have a bad stigma attached to them because they're credit cards.
It's about knowing what you need, what you can
flexible payments,
when
it's
to get
building
it,
a paper trail.
Yeah.
You're able to lower interest rates, get increase on your money. So I mean, it's an awesome plan if you do it the right way.
And then the SBA door opens up a little bit easier once you get established.
Absolutely.
Cool. Well, Jamie, we hope that answers your question. Hope that helps everybody else out there keep them coming. And thank you for joining us for another session of LenCred Credit Geek Q&A.